Hello and welcome. My name's Heath Williams and I'm the CEO for Nordic Eye Sales Accelerator. What we like to do is grow companies' revenue aggressively. We are, in effect, your outsourced sales operations. So today I've invited Chris Wells. He is our Group Sales Director. Him and I have known each other 15 years and this is our third venture together. So we've worked well together for many times. So I thought it'd be great to have you over.
Thank you.
And I thought we could talk about why clients engage with us.
For me, it's always been pretty straightforward. Why do clients work with Nordic Eye Sales Accelerator? And it's all about growth.
I mean, what CEO doesn't want growth? Whether you've had a good year or a bad year, you always want to push it on, don't you?
You and I have been in the sales or the business of sales for what, a collective?
50 years? More? 60.
Probably a bit more.
Definitely.
Yeah.
It is more. It is more.
Yeah.
But I think what we've learned along the way is the importance of a methodology and a framework.
Yeah.
Because how you structure it and break it down. I mean, how many CEOs out there have their top sales guys a maverick? And he says, give me a forecast and a pipeline. He says, oh, don't worry, I'll just bring it in.
Yeah.
And then they don't.
Yeah, it's a pipe. I like to. It's a pipe dream, not a pipeline.
Yeah.
And so I think organisations, they come to us because they want to. I mean, in the first instance, we'll go and do an audit, won't we?
Yeah.
I mean, we go in, and it's about overlaying that 50, 60, 70 years of experience and the methodologies that we know work.
Yeah.
Transposing that onto what they're doing.
Yeah.
So we go in, we take a look at how are you generating leads? How are you qualifying the business? Is it qualified?
It's benchmarking. It's your starting point, isn't it? So when we go into a company and organisation, we take stock. So we start with your lead generation and your conversion to closure. And then we overlay our methodologies, 5 steps. It's qualification, positioning, presentation, proposal, close. We lay that over the business. And from there, we can start to benchmark and see where the pitfall and the holes are. Because actually, it's a complicated process. To start with a qualifying, that's a certain set of skills. To closing the deal, well, that's another set of skills. And it's understanding where your strengths is as an organisation.
Well, and oftentimes people get stuck in a rut of doing things the same way.
Yeah.
They've got the same people doing the same things, getting the same results.
Yeah.
And they'll have these blips of good years, maybe a bit of luck. But us being able to come in with a wealth of experience, having run startups, been part of big multinational software firms.
It's getting that consistency in your sales and also the ability to forecast accurately. Because if you know, we work with a lot of high-tech organizations and the likes of software companies, but they need to know what revenue is coming in because they've got to resource and gear up in the background. If you're a service organization or you're a manufacturing organization, if you don't know what sales are coming in, you don't know how to gear up your business.
No, it's about predictability.
And the more consistent you are, the more predictable you can be.
Yeah.
So if you're working within a framework and working within a structure and you can then benchmark that, you've got a much clearer view.
And I think it's astonishing for most CEOs. You think a lot of CEOs have been... Maybe they've come out of sales, but they're caught up in the running of their business, and they're like, why aren't we doing this stuff better?
But some CEOs aren't even sales savvy. Some of them are like technical guys. They've built something, they made something, or they are, they're not sales orientated. And for those technically minded people, they struggle with sales. They think it's an art, there's a magic and a mystery to it, and there isn't. It can be managed and benchmarked just like your R&D department or your customer services department. If you've got the right framework, if you've got the right tools, you can structure it and you can start to get that predictability. And once you've got that, that knowledge gives you power because you can then sort of manage your business and drive it forward. But if you're just constantly, what's coming in? I mean, take this year. Let's take the CEOs that struggled in 2019, talking to their sales directors and saying, being promised that these deals are going to come in at the end of the year. How many CEOs out there actually rang up the prospect end of November and said, hi there, understand you've been chatting to my sales guy, looking forward to working with you in the new year.
Yeah, very few.
Can we confirm that you're going to sign up with us? Yes, great. No? Oh, why not? Well, yeah, I can fix that. We're done. But I bet you many CEOs didn't make those calls, and now in the beginning of the year, they're like, where's the deal? And they're calling their sales guy in today to explain where the hell is,
Yeah.
And actually, they could have could have jumped in before.
That's what we bring, and I think that's why organizations bring us in, because they want the structure, they want the framework, but they also want the backbone of that experience of doing things like that.
Yeah.
That it's so obvious.
To us.
Well, that's a good point. Yeah.
Because if you don't, it is. Because it's not just the phrase. There's the tools that we provide. I mean, take your steps to close process. I love that. That's really good, because we can say, like, we've got 10 proposals at the end of the month that need to be closed, but what's the activity to make that happen?
Yeah.
And often sales guys just aren't focused on that. We also have a tool called the client profile report, and I love that because there's a page in there that talks about the steps. Action steps.
Yeah.
And I love it when you just go straight to it, and the last one should be close. And sales guys just don't put it on there.
Yeah.
They're like, I'm going to have a phone call, I've got a meeting, I've got to send an email.
But it's beyond that, isn't it? It's that mentality that from the first call with a prospect, you should be thinking about the close.
Absolutely.
It's all about, can I ever close this person?
I believe that when you get to the end of the line, and if you can't close a deal, you've fucked up somewhere along the way. Excuse my French, but it's your mistake. When they get to the end and say, why hasn't the deal come in? They haven't got the money. Well, then you should have qualified that up front. Budget, timescale, functional fit. Don't tell me it can't do something. Don't tell me that they haven't got the money, or they're going to push it to next year. You should have known that day one. Yeah. Otherwise, you've just wasted your time.
Yeah.
And you need to sift that out right at the beginning.
So what do you think, in a whole sales process, where's the hardest bit? I mean, what's the...
It's all hard. But I think the key actually is outside of our 5-step. It goes back to lead generation. Because if you've got the wrong type of profile prospect, you're making your work harder for you day one. But if you can actually profile what is the best fit opportunity for you, now you've got, then qualify it, now you've got something to work with. Now you've got a chance of closing it. If it's the wrong type of company, they haven't got the budget, you're wasting your time to start with. So just don't look at a long pipeline, look at a qualified pipeline, and make sure that your marketing team are actually cherry picking opportunities from the marketplace that suit your business and products best. Yeah. Once you've got that, qualify it.
Well, you make it. That's a super point, actually, because I think one of the bits that we do really well, and I think we can put up the flag on this because we do it very, very well in that upfront analysis, is saying to a client, are you speaking to the right people? I know we've had instances with new clients where they might have been selling to that particular profile of person, and we look at it and say, really?
Well, yeah.
Why shouldn't you? I think you should be selling it to that profile of person.
And it's sorry to interrupt, but it's really important to when we go into an organization to actually go in and understand the profile of their sales team, because you'll find a lot of sales guys have a comfort zone and they fall into it. They may get success with a deal in, say, retail. The next thing you know, that guy's running over the hill with retail, but actually just because he got a win there doesn't make it right for the business. It could be that you're better off in financial services, and you have to build your pipeline around the right profile for the business, not the individual sales guy.
Absolutely. We can also see the golden nuggets where they've maybe just been selling, typical feature benefits, and we come in and just from pure wealth of experience can say, actually, that tool, whatever it is, whether it's a piece of software, whatever it is going to have way more value to the chief marketing officer or the CEO, and they're going to spend far more money, far more quickly than selling it to that person.
Well, classic example. One of our clients this year, Plecto, their average deal value, if their business was an inbound sale where departmental heads were ringing in or emailing in with a budget of, say, £200 a month. Whereas when we set up an outbound operations for them in the UK, we're actually averaging £40,000 deals because we're not targeting departmental heads, we're targeting CEOs, and we're looking at the benefit of the products and what value does that bring to the CEO. Actually, it's a significant value, and therefore when you can justify the value, you can justify the price.
So it's interesting because what we're talking about here is not just accelerating a sale. We're actually talking about doing all the things that a CEO wants. It's about getting a bigger value sale faster, more predictably.
Well, look at the cost of getting a sale, right? The energy and the cost of finding that opportunity, it's horrendous. So if you can actually sell something for twice the value, you've halved your costs, have you? I'm not sure that's quite the right fraction, but you know, the first thing you want to do is increase the value of your proposition, because you don't have to sell so much to do the same number, and you're making life so much easier because it's so much easier to do one deal than it is to do 2 or 3.
Yeah.
So, you know, and
if you can get your existing sales team of 4 or 5 people to sell half the number of deals at 3 times the value, twice as quick,
and probably people are sitting there listening and watching this thinking, oh, well, really, yeah, of course it is. But we've actually done that.
Yeah.
And we've done that. And I think the trick is to justify the value. So if you can identify the right opportunity by profiling the prospect up front, they need to be 200 employee organization. They need to be turning over X amount. They need to have X, Y, and Z. And you find that. And then you talk to the right person. You don't talk to the manager. You talk to the CEO. He can see the benefit of the business and the value. And now you can walk in with a much higher price.
Yeah.
So that's some of the tricks. But to get a company that's been, I don't know, they've been selling for 10, 15 years, or they've got a sales manager that's been in there for 5 years or so, it's difficult to change that.
It is.
And that's where our framework helps, because we can actually logically explain how they need to make the changes and why.
Yeah.
And then we can give them a plan to execute, or we can do it for them.
Yeah. And I think that's the power of an external set of eyes. At the end of the day, you know, to get that external viewpoint, and you know, to bring in very easily that cumulative.
Don't cut that.
No,
that in.
it's not. It's not vodka, unfortunately. Get that 60, 70 years worth of experience, and whilst we think it's all about us,
isn't it?
there is a team. You know.
Oh yeah.
There are others.
Oh, that's right. Yeah.
Doing the work.
Yeah, actually doing the work.
Yes.
Yeah.
But there's to be able to easily plug into that is hugely valuable.
Yeah. But look, we can do this in a nice, cost-effective way. You don't, there's no harm, is there really? Just engaging with us, do the audit, get a fresh set of eyes and things, and take a view. But I think they'll be impressed.
Yeah.
Because I think everything we touch, we turn around, don't we?
Yeah. Yeah. I haven't seen anything. And the thing is, we are a little bit selective as well.
Yeah, there is that. Because we're actually practicing what we preach. We don't want to work with anybody and everybody. We want to work with companies that are like-minded, that are hungry, and want to grow the business aggressively.
Yeah.
And then we can roll our sleeves up and get
there has to be that essence there. And that willingness.
Yeah. So I probably meet and speak with 2 or 3 companies, CEOs a week, who are looking for investment that would like us to engage with them.
Yeah.
And, we'd make a big mistake if we were just to engage with everybody. And so when I looked at the companies that Nordic Eye are investing in, it's important for me to, first and foremost, to understand the CEO.
Yeah.
Actually, can I get on with him? Because if I like him and I think he's good, then that's the first thing.
Yeah.
Then I want to know about the product and the market and the success to date and the opportunities and how we can add value and how we can grow their sales. But the first thing is, can I get on with them?
Yeah.
And I see it, and it's got to the point, because I'm meeting with so many CEOs, I'm starting to see us a bit like a specialist restaurant. Where you can. Yeah, I know. We are in the kitchen. Where, some restaurants you can just walk in, others you need to book a table.
I think you need to pay me a bit more money.
When was the last time you took your wife out for dinner?
Let's not go there.
Let's not go there. But there are some restaurants where you can't, it's who you know. If you want the table in the window, and we're a little bit like that. We want to work with companies that excite us, that we can get this aggressive growth. So I think we're in a very fortunate position.
Yeah, yeah.
We've been talking generally about, the concept of how we can improve an organization's sales, but give me an absolute clear example of when we engage how we can significantly increase a typical deal value for an organization.
Okay. So I've got a good example, and I think this is a very typical one.
Yeah.
Their average deal size before we entered the scene was around about 200 a month. Okay. So, never much more.
And that was an inbound lead, wasn't it?
Yeah. So they're working completely inbound. In this instance, it came in through our process, and we closed it for 36,000.
Yeah.
So
it's $3,000 a month. So that's versus 200. And that's a true case study, isn't it?
And that's a true case study. Yeah. I can't imagine there's a CEO on the planet, really though, that would not want to understand, how are you doing that then? Yeah. And I'd at least want to find out a little bit more.
And for those who are listening or watching it and think that's, really. Well, actually, it's true. The reason being is it's inbound from a divisional head with a limited budget, typically, whereas we've gone outbound to the CEO, made him aware that it's not just available for the sales department, but for the whole organization. Yeah. And the business benefit for him is significant. And therefore, you've justified an increased value.
Well, I tell you what, that's a really good point. I mean, it goes, for most CEOs, for most organizations, this goes way beyond just bigger deal values. Their investors, whomever it is, public, private, start to see that they can sell their product for 10 times what they were. The whole value of the whole valuation of the company is going to go up.
Yeah. Well, I'm going to throw another client in the pot, WebLife. WebLife was an organization where Nordic Eye, venture capital, Danish VC, had put 3 million into them in January. Company was worth about 6 million. Mm-hmm. They had 3 clients, US based, and they had 17 staff, no office. We engaged with them, and 10 months later, we had got 11 clients, and we were able to show that the company had transitioned from being US-based to now an international organization. We had international clients. Some of the clients were extremely large. In fact, they were 11 enterprise opportunities. And so we didn't just bring new business and profit and increase their margins. We were able to help them increase their valuation to the point that they were sold 10 months later for 66 million.
Yeah.
And that means
everybody's happy.
I love it. Yeah. But the point there is that it's not just about the sticker price and making the margin on the deal. It's if you package it right, you're increasing the value of the business because you are now perceived and seen as a truly international company, not just a whatever you might be. Yeah. And I think that's the value we add to the companies, in addition to just bringing new deals to the table. I think it can get very strategic for us in how we work with our partners.
Yeah. And I love the way that we are willing to work with organizations to show that we're invested in that outcome. Yeah. So we'll sit down often and say, well, what is the outcome that you're looking for here? It's an exit. Yeah. Okay, fine. Yeah. Then let's all work towards that end goal. Yeah.
We show that in the way in which we price things, because we reflect that we're not just taking a commission and a margin on the deals, but we can be engaged to the level that we have retainers and also exit bonuses. Mm-hmm. So we are, really, we're not just outsourced to the point that's, those guys in the UK. Yeah. It's, we're a vested part of your business. Yeah. You should look at us as in addition to. So it's not like a dilution of your business. When you engage with us, you're adding us to your business, and therefore we're contributing a significant amount of revenue and profit, and also your ability to position your company increases your valuation, because often we bring companies from the US or Denmark into the UK. Yeah. But with Brexit coming up, and I think this is probably a topic for another day, because there's so much to discuss there. How many CEOs out there have really got a plan for diversification in the next 12 months? I mean, no, and I don't, can't blame them, because who knows what's going on. But the reality is, it's going to hit us and hit us hard. If you're trading with Europe, there are going to be issues, and you should be looking to balance that with maybe another territory, or what are you doing to increase your levels of sales in the UK? Yeah. If you are inbound, should you be adding outbound? Should you be looking at your customer services? What's your client retention? There's a ton of stuff you might want to square up. which is easy and quick to do, whilst you are understanding more about Brexit before you react.
Yeah.
But all that sort of stuff we can help with. Well, Chris, thank you for your time.
My pleasure.
I've really enjoyed it.
Me too.
It's been really good to catch up.
Yeah.
I hope you've enjoyed it. And if you'd like to be part of our series, if there are any CEOs out there that would like to chat with me, I'd love to hear from you. Email address is below, and thank you for watching.